Are you thinking about buying a home in Lancaster, Pennsylvania, but not sure if your credit score is good enough? In this video, I'm breaking down the 7 most asked questions I get when it comes to credit score and buying a home in Lancaster, how credit actually impacts your rate and payment, whether you can actually buy a home with less than perfect credit, and what to do now if your score isn't quite ready. Question number 1, what credit score do I need to purchase a home? Most buyers in Lancaster County can purchase a home with a credit score between 580 and 640. This can be quite surprising because a lot of people think you need a credit score of above 700. Now that said, the lower your credit score, the more it can impact the different types of loan options available to you and also that monthly payment. Number 2, what is the minimum credit score for an FHA loan? Now, FHA loans are a very common type of loan for first-time home buyers because they give you slightly favorable interest rates when you have that lower credit score. If you're looking at putting 3.5% down, the minimum credit score you need is around a 580. However, if you're able to put 10% down or more, you may be able to get all the way down to a 500 credit score and above. Now, other factors are going to be taken into account. For example, if you've had lots of recent missed payments, this could also make you less likely to be able to get approved. FHA loans are definitely more forgiving than conventional loans when it comes to missing payments, having a lower overall credit score, your debt to income, and things like student loans as well. This is why they're so popular with first-time home buyers, because you tend to be able to borrow a little bit more and it doesn't penalize you as much for having a lower credit score. Question number 3, what credit score do I need for a conventional loan? Now, conventional loans are a little bit stricter than FHA loans. Typically, you will need a credit score of at least a 620. But the key thing to understand here is just because you qualify for a conventional loan doesn't mean you should get one. There's qualifying and then there's qualifying. So for example, if your credit score is above 680, typically you're going to get a much better rate than a 620. There are also certain lenders in our area that will give you different type of loan products. For example, there's a bank that I know that will do a 0% financing. So they'll give you 100% of the mortgage if you have a credit score of 680 and above. Now, when you start getting above 720 or 740, that's when you tend to get the best overall interest rates, which could save you hundreds of dollars a month on your overall payment. Typically, when I sit down with my clients, we'll have a conversation of what they can afford to purchase with an FHA loan, a conventional loan, and see which option may be the best one for them. Question number 4, do VA and USDA loans have a minimum credit score requirement? Now, while these loan types don't advertise having a minimum credit score, it is recommended that you still have above a 620. You may find that when you get below this, you're going to actually have to start putting some money down, or you're not going to be able to get very good interest rates. And similarly to like most other types of loans, if you've had kind of multiple inquiries or you've missed multiple payments recently, then you may not be able to qualify just yet. The VA loan is particularly popular because it enables you to put 0% down in most cases. You're also not going to have to do any mortgage insurance, and they tend to give you very competitive interest rates. USDA loans give you similar perks to this, however, they are going to be in more specific areas. So do make sure that you check the website to make sure that the homes you are looking at are going to be in these areas, and they also have other requirements such as income. Question number 5, how does your credit score impact your interest rate and overall monthly payment? Now, unfortunately, the lower your credit score, the most often cases your payment is going to be higher because lenders are going to see you as a higher risk. This means you're going to have a higher interest rate. Also, the lower your down payment, this can also say that you don't quite have enough money or you're a higher risk borrower, so you tend to have a slightly higher interest rate. Now, the differences can be quite significant. For example, the difference between like a 620 and a 720 credit score could be $300 or $400 a month on a $250,000 mortgage. I had some clients, we had one borrower who had a credit score of around 750. They had an interest rate at around 7%, and they had mortgage insurance of around $70 a month. However, when we went to add a co-borrower who had a much lower credit score, I think it was around 600 or so, this mortgage insurance jumped from $70 a month up to about $300 a month. Plus, they also had a higher interest rate. I think it was around 7.5% at the time. This meant they were going to be adding an additional $100, $125 a month, plus the PMI. So their overall payment was going to jump by nearly $400 a month just by adding that extra borrower on. This is going to cost you tens of thousands of dollars over the lifetime of the loan. Number 6, can you buy a home with average credit in Lancaster? The good news is absolutely. We help people every day purchase a home, whether the credit score is 500 all the way up to 850. Now, yeah, the lower it is, the fewer options you're going to have available to you, but there are plenty of well-designed programs that are going to help you to get on the property ladder with minimal and sometimes no down payment at all. The best thing to do is to connect with an agent like myself, and we'll then connect you with a lender, and we can see what your purchasing power is, what you're trying to achieve, and ultimately how to give you the best deal to purchase that property. Number 7, what should you do if your score isn't quite ready? Now, the first thing to do is not panic. You'll be surprised how quickly you can make improvements to your credit score, even just by paying down a couple of simple credit cards. Now, we always say to our clients, when you're looking at purchasing a home, do not open any new credit cards, do not take on any additional debt. Do make sure you keep making payments on time, as just 1 or 2 late payments can massively impact your ability to borrow. You also want to avoid getting any new debt. So it can be very exciting when you go to purchase a home. However, don't open up any furniture store cards. Basically, from the time of speaking to a lender to purchasing a home, what you want to do is follow the steps they give you clearly. Don't take out any additional debt and don't make any major other financial decisions. You may also find there might be some errors on your credit report, so you want to go to the credit bureaus, dispute these, and these can again boost your score by 10, 20, 50, sometimes even 100 points, which all of a sudden can be a huge game changer and again, save you hundreds of dollars a month on your payment. If you're thinking about making a purchase in the near future or you want to work on your credit, then click on this video where we're going to talk about how to get pre-approved. We'll get you connected with a lender and take the necessary steps in order to make that purchase.